Yes, the bear market has begun. It is indisputable, unequivocal, and certain. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of January 11th, 2016. So certain, that's a pretty strong term. Nothing is absolutely certain in the markets, but it is certainly highly probable. This is a really bad time to be a buy and hold investor. Sure, if you got a 5, 10, 15, or even longer year horizon, the market will probably recover, your account will recover, but why sit through that? There's really no reason to sit here and endure these losses and wait for it to come back. We can make good profit as the market goes down. And then when the market recovers and heads back up again, which is again highly likely, we can participate in that. I talk to lots of people, and I have quite a few subscribers, both to my newsletter and to my stock picking service. I talked to two people that stand out in my mind this week. I talked to a lady who's a friend of mine, and she's subscribed to my service, and she's just moving her account around, getting her stuff set up, and it's not really set up yet. But I told her, 2 or 3 months ago when she was first getting started, I said, hey, go ahead and just move to cash because the bear market is starting. And she did that. And when I just saw her late this week, she had tears in her eyes. She said, Dean, you just saved me thousands and thousands of dollars because making no money while you're sitting in cash is way better than losing a lot of money. I talked to another gentleman this week who's 71 years old, and his broker had him in a bunch of biotech and other, kind of high-flying stocks. He lost 28% last year by following the advice of a stockbroker whose, vested interest is in the commissions and all that kind of stuff, not in how this gentleman's account was performing. I just believe so strongly that it's so important to take control of your own account and to manage it according to the realities of the market. And the reality right now is the bear market has started. I published my video, my update, just like this one, on December 19th, and I said, hey, the bear market has started. I saw clear evidence of that, and I'm not trying to boast. I just have some really good analysis techniques that have played out over the years and have proven to be really, really highly accurate. And look at the market now. That was 1,000 points ago. We're down 1,000 points since I said I believed the bear market was starting. Now, the good news is, again, we can make some really good profits as the market goes down. And if you're still, in your retirement account or your brokerage account, or even if you're in, some employer-sponsored plan where you don't have a bunch of flexibility, there's still time to just move to cash. Now, I'm not your financial advisor. I don't know your circumstances. But if it were me, I'm not going to be buying and holding and sitting in equity mutual funds and sitting through what is highly likely to be at least a 30 to 40% correction in the market. It's just getting started. It's got a lot farther to go down. So of course you can make your own decision, but I think it's way better to make no money than to lose a lot. And if you have the ability, if you have the account set up in whether an IRA or a brokerage account or anything like that, there's the ability to make some really good profit as the market goes down, which it is doing. So as always, it's kind of fun to look at some headlines. So here's one from CBS News back on January 4th. It says the stocks start 2016 with a big fat thud. And the lead line here is New Year is off to less than a joyful start on Wall Street. Yeah, I think you're right. Unless you're on the right side of the market and you are short, or you're trading it with put options, and then it's a very joyful new year. And like my subscription pick service, we're seeing some amazing profit. But if you're just a buy and hold person and you're just long on stocks, yeah, big fat thud. Here's another headline from NBC News. It says stocks end one of the worst opening trading weeks ever, down 6%. Well, that's true. But worst is kind of relative. If you're on the right side of the market, it was an amazing week, and we made a ton of profit. But stocks definitely are going down and had a very dramatic start to the year to the downside. Here's a headline from USA Today, the source of all good hard news. Stealth bear market mauls Wall Street. How do you like this guy's expression? It's like OMG, right? Well, I don't know what's stealth about this bear market. I think it's out in the open, and it is clearly underway. So, yeah, it's just fun to look at this kind of stuff. So here's a quick look at Morningstar, which is a review of all the major mutual funds. And you can see here U.S. equity funds, all these different categories, large value, blah, 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 right? What was their one-year performance? Really, which is their 2015 performance. I'm using a red line to draw around here because every single one of them in the red lost, an average of 7 or 8% last year. So here are my results from the Follow Me Trades trade picks. Again, I really don't want to sound like I'm boasting, but in 2015 we made 28.63%, and that's not from having a crystal ball, it's not from taking wild risks, it's not from getting lucky, it's from having a highly disciplined approach to analyzing the reality of the stock market and trading in accordance to what the charts are telling us and using very strict risk management guidelines. I'm really pleased with those results for 2015. And there's no mystery about that. There's nothing hidden. Here's a list on my website of every trade I took last year. List the details, the symbol, the date we bought it, what we bought it at, the date we closed it, what we sold it at, and complete transparency, and we ended up the year up 28.63%. So I show my results. Again, I hope everybody listening subscribes to my stock picking service. And you can do that. You can sign up. I give a discount to the folks subscribing to my newsletter, watching this video. There's a link available here. You can sign up and share in those results. But whether you do or not, I just hope that you get some value out of my updates and that you position yourself accordingly. Again, this bear market has only gotten started, and I just hate to hear stories of people who sat there through a severe correction and just lost a bunch of their account, a bunch of their net worth. There's no reason for it. There's no reason for it at all. If nothing else, for people, I would say go to cash. If you're not in a position to trade, you don't know what you're doing, you're not comfortable, go to cash. And making no money is better than losing a lot of money. Let's take a look. This is the daily chart for the Dow Industrials. Back here, December 19th, when this new low was put in, I said, hey, the bear market is starting. Well, look at this. This is pretty dramatic. And there's a lot of stories about what's going on in China. There's a lot of stories about what's going on with the price of oil, and there's a lot of speculation about the Fed interest rates. Which of those have an effect on the stock market? Well, all of them. All of them do. And tons of other information and data and how investors are interpreting that and how they're responding to that. What's important is the reality, and the reality is market's heading down. Now, don't be confused. We've had 1, 2, 3, 4, 5, 6, 7 days in a row where the market has dropped dramatically. It probably won't keep doing that. The market does not move in straight lines. So we've had this is a pretty straight move here. It won't just keep doing this. That's not how price moves. It's not how the market works. So we will very likely, we've had this move. At some point, we will see a pull back up. And then we will see a pull back down and a pull up and a pull down. Don't be confused by these short-term kind of rallies here. We're going down. That is the absolute high priority or high probability outcome. Here's the August 24th low. I'm on record. We're taking that low out. We're going below that. In fact, let's move to a higher time frame and take a look at my projections once again for where the market's going. This is the Dow Industrial on a daily chart. Let's move up to a weekly. So here's the Dow on a weekly chart. And as I've said before, I believe this correction is going down into this zone right here, at least. We're currently, the close this Friday was on the Dow 16,346. The analysis is that it's going down to at least 14,429 to 1203, probably somewhere, somewhere in the middle of that, maybe even lower. No reason to sit through that and endure that kind of loss. There's still time. There's still time. So if you're sitting long in equities, long in mutual funds, if it were me, I would be out. I would at least go to cash if you're not able to trade and take advantage of this downtrend. Here's the S&P 500 if you're interested in the projections for that. We closed at 1922. I believe, based on my analysis, it's going down here. 1644 to 1343 is the high probability, zone for the S&P 500 to go down to. Every week I take a look at oil and gold as well. So this is oil. This is the actual oil futures contract, and you can see oil just continues to put in new lows. It's like the limbo game, right? How low can you go? Friday oil futures closed down at 33.16 per barrel, and there is no end in sight. This will eventually correct at some point and move back up. If it were to start Monday morning, a correction from the current low up to the previous high, back in 14 of 112 would be up here somewhere into the the low 70s, 63 to 82, but the midpoint in the low 70s. That's not certain yet. There's no indication that it has found a bottom, but it will correct at some point and pull back up. Even if it's going to head lower, it'll pull back up first and then head down again. And there's a lot of geopolitical stuff going on with oil. Iran now gets to sell oil. U.S. is exporting oil for the first time since the 70s. There is an incredible oversupply of oil. Now the oil producers, that's not a secret to them, and at some point they will probably slow down production, cut back supply, at least in the short term, and we will probably see this correction happen. But for now, it's just going down. It's just going down, and we're just enjoying that at the pump and, in the retail part of energy. Here's gold, and this is again on a weekly chart. This is the gold futures contract. You can see as we've been in the 6-year bull market in the equities market, gold has come down. Gold has a pretty strong reverse correlation to the equity market. And look at this latest uptick here. If gold were to correct, this we on an Elliott wave we would call this a 1, 2. So from 2 down to the bottom of this 3, right? So if gold were just to have a correction, it would get up. Current close was at 1,097 on the futures contract. Just a normal correction up here would be to 1338 to 1519. And this is a weekly chart. It takes a long time to play out. You see on the bottom here, this is a year, right? So over a year or two, gold could have a really, really nice correction and give us 30, 40, 50% return from this point. It is showing signs that it is heading up. I'm not ready to call entries on gold yet, but it is getting really close. Really close. Let's look, just for fun, let's look at gold on a monthly chart. So here's a gold on a monthly chart. So every price bar here is a month. You can see years down here, here's 2016, 15, 14, right? This is a very long-term chart. Gold ran up for a long time. It has corrected substantially. It's actually corrected right into a very clear Fibonacci retracement zone. If I put these retracement lines on here, this is where we expect a retracement to end and for it to head back up. And a very long-term target on gold would be 1800 to 2280, somewhere into here. So it really looks like that's starting. And again, I'll I'm not ready to go long yet, but it's really, really close, and I'll keep you updated on that. Yeah, really, really interesting what's going on with gold. I'll leave you with one of the picks that I published to my subscribers. This is MCHI. This is a ETF, exchange traded fund for China. And I published this back here about 2 weeks ago. We went short on MCHI, the China ETF, at $45 a couple weeks ago. And you can see it's just done nothing but drop like a stone. And it's just based on the analysis techniques that I've shown you on the indexes and stuff like that. And it's, man, we're trading this with an option contract. We're in it about 100% profit. About 100% profit already, and we got a long way to go. We're probably going to double or triple our money if this trend continues and it makes it down to this target zone down here. Again, no magic, no crystal ball, just solid analytical approach and disciplined approach and risk management. We never take really big risks. If you keep hearing me talk about options, if you are intrigued by that, but you don't know what's going on and you want to learn, I've actually got an options course. It's launching on January 15th, and I'm really excited about it. It's basic options. It's how to, what options are, what they mean, and how to analyze them, how to trade them, how to do it with really, really low risk. So if you're interested, there's a link on the screen here. You can sign up for the course. It's kicking off in a week, and it's a very simple approach. We don't use all these sophisticated strategies of condors and butterflies and all that kind of stuff. We simply buy puts, buy calls based on the chart and manage it with low risk, and we're getting really good returns on that. So if you're interested, you can sign up. There's still time. Thanks. Appreciate you subscribing to the newsletter. Lots more to come. It's a really interesting market, and I will keep you updated. And we'll catch you next week. Bye for now.